Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't. Don't forget to subscribe for similar videos and follow me on Instagram for bonus content. So let's get started. So this video is going to be awesome, guys. Like our regularly scheduled program, we have our 3 stocks for the next month of September, but we have 3 YouTubers coming together to talk about. We're each going to take one. One's going to be Tristan from Cooper Academy, other is Antonio over from Baby Investing YouTube channel, and of course yours truly. So wherever you're coming from, guys, if you're from their channel, if you're from my channel, definitely check all the other channels out. They all have great stuff. We're starting to collab a lot more often, and I think it's great that we're doing that. And I would love to continue with stuff like that in the future, but for right now, let's roll up our sleeves because we're going in. So get your snacks, buckle up, and my guests are going to be going first because they're my guests. I gotta be nice. So after you guys.
What's going on, everyone? So first of all, a big thank you to Nick and Antonio for asking me to do this video. I love doing collaborations, I love learning from other people, and I love reaching a different audience. So looking forward to this one, looking forward to seeing what you guys have to say. And with regards to this collaboration, we had to pick a particular sector that we liked. I got on first and I chose technology. Sorry guys, pick your own sector. Technology is mine. And we had to basically pick our favorite stock in the specific sector that we chose. And anyone who's been watching my channel, I'm sure you guys know what stock I'm going to choose with regards to technology. I've done a couple of videos on this stock lately, and I just love it for a couple of main reasons, which let's just get into that now. So the stock that I chose is Facebook, the stock that has had a pretty nice dip in price lately, and it's made it quite attractive for me. Price is one reason, which we'll get into soon, but the main reason why I like Facebook is because it has a massive competitive advantage, okay? It dominates the social media sphere. No, it doesn't even have any real competitors. Let's think about that for a second. Who do we actually have as competitors for Facebook in the social media sphere? Pretty much no one. China, they have their own sort of social media app. I believe that's WeChat. But with regards to China, with regards to the rest of the world, Facebook absolutely dominate. No one is even close. I mean, we can talk about Twitter, but that's not really social media anyway. Facebook has a monopoly on social media, and because they got this monopoly, it offers them a lot of power and a lot of potential to make money. Let's get into the facts and figures. Facebook has over 1 billion monthly active users on its platform. They also own Instagram, which has 1.5 billion monthly active users. And they own WhatsApp, which has 1.5 billion monthly active users again, which is crazy. It offers so much potential to make profit. The main way they make profit is obviously ads. Advertisers pay Facebook to advertise on their platform. Now at the moment, TV advertising, it costs a lot more to advertise on TV compared to advertising on Facebook. And slowly this pattern seems to be shifting. I mean, Gary Vee has been trying to put across this message. I've been trying to put across this message. I mean, even the likes of Ryan Scribner has been telling people how cheap Facebook ads are. And slowly, as brands recognize this, they're going to move from TV ads to Facebook ads. And this will mean they will pay more for Facebook ads, which means more money for the company, Facebook, which means more money for us shareholders. This is exactly what we want. So basically, the main competitive advantage that Facebook has is the vast amount of people that use their site and the monopoly that they have on social media. Just remember how big social media actually is. I mean, anyone in the West, anyone who's watching this video, probably everyone that they know uses some sort of social media, whether it's Facebook, Instagram, or if you're a bit older, maybe you use WhatsApp. The next reason why I like Facebook stock is because they have a number of growth opportunities. Okay, we've already talked about how they can grow through increase in Facebook ads and increase in the dollar amount per Facebook ads. They can also do the same via Instagram, which is actually one of the biggest growing platforms. It's grown a lot quicker than Facebook is, especially among the younger generation. So as time goes on, I think Instagram is going to get a lot more popular. And again, this is another growth opportunity for Facebook. The next growth opportunity that I can think of off the top of my head is Oculus. Now, Oculus is owned by Facebook, and they operate in virtual reality. And I can definitely see this taking over maybe in the next sort of 5 to 10 years. Not within the next couple of years. It's still a slow growth thing. I mean, I haven't actually used a VR headset yet, so it's definitely not ubiquitous throughout the community now, but I can definitely see this being big in the future, whether it be 5 years, 10 years time. It's a scary thing, but again, Facebook are a big player in the VR platform, and again, this offers more growth opportunities and more opportunities to make money. They're also in the online dating sector, which is very interesting. I mean, they got all these users on their platform. As I said, 1 billion on Facebook, 1.5 billion on Instagram, 1.5 billion on WhatsApp. Now, all they have to do is turn these people onto the dating side of things. They're already pretty much there. They just need to turn these people onto their dating platform, and boom, they got so many users. I mean, they could end up taking over from Tinder. Who knows? The power that Facebook has, it's ridiculous. And the last growth opportunity that I want to talk about is monetizing WhatsApp, the platform that has 1.5 billion people on it, and they are yet to monetize it properly. I mean, this is crazy. This offers so much opportunity for growth when they do find a good way to monetize the platform. So that's a bunch of ways that Facebook can grow in the future, and a bunch of reasons why I like Facebook stock because of their growth opportunities. Let's get into the next one. And the last reason is because I like their price. So in one of my previous videos, I did an intrinsic value calculation using a Benjamin Graham formula, and I got an intrinsic value of $248. Yep, $248. And at the current price, it's about $180. So this should offer you about a 15% expected return, which is a lot better than the current market. So with that dip in price, it offers a cheap deal, according to my opinion, and offering a good rate of return. But guys, also be aware that Facebook is a speculative stock. Its PE ratio is fairly high, and it comes with a bunch of risks. I've mainly talked about the positives in this video, but in my previous videos on Facebook stock, I've gone real in depth into not only the positives, but the negatives as well. So I'd recommend checking out that video, which is on my page, which I'm sure Nick will link to somewhere in the description or something like that. That's all I have for this video. Thanks so much, Nick and Antonio. Very excited to see what you guys have to say with regards to your sector and with regards to your stock. But that's it for me. Till next time, catch you all later. Bye.
Thank you so much, bosses, for inviting me to take part of this beautiful, beautiful collaboration. I really enjoy working with y'all, and I do hope to see more of this in the future. But anyways, I won't lose any more of your time. I'm going to dive right into our pick for September of 2018. For which, by the way, I'm sure we will get a lot of hate, but I guess there is something for everybody out there. So anyways, here we go with our pick for September of 2018. Believe Inc. with a ticker symbol BLEVF. That is indeed a marijuana company. It is indeed a very young company. It is indeed a company that is not yet profitable. But yeah, anyways, I won't ruin the fun for you, and I'm just gonna let you enjoy the video. So come with me, let's dive into the computer and see what we can find.
Now, as you can see here on yahoofinance.com, we have a very short description of the company. But anyways, let's just check it out. Believe Inc., together with subsidiary First Asset Medical Inc., operates as a medical cannabis company in Canada. The company cultivates and sells cannabis for medical purposes. Believe Inc. is headquartered in Flamborough, Canada. But what really is something special is what we can see here if you just Google the company's name, is that they already are a licensed producer. And not only they, but if we click on investors relations, we can also see that Believe Cannabis Corp with a K and not a C, a wholly owned subsidiary of Believe Inc., is now a licensed producer as well. Our sales, they say, license was issued in May of 2018, as well as our oil production license. Not so long ago, a very young company, but a lot of hopes for the future. So that is, of course, very important to have for a company that trades as low as Believe does. because most of the cannabis companies that trade around $1 often are not even licensed yet, and they only trade on speculations and very, very hot hopes for the future. But we believe anyway there is a lot more going on, and we're going to check that all out. As always, the next thing we've got here are the financials on yahoofinance.com. Now, before we start with that, just please don't expect nothing crazy. It is still an emerging company. They are not yet profitable, and they are still struggling to lift the profits from the ground and whatnot, but let's just give it a try. So we've got a no PE ratio, actually no forward PE ratio, as I told you, because they don't have no profits. But what we do have, however, is down there on the balance sheet, $10 million in cash, and only, and I say only, you're going to find out why, 3.77 million in debt, because with cannabis companies, it is usually the other way around. But Believe does have their money. And I know that because I saw this article a few months ago. Cannabis Sweden and Believe signed definitive agreement for up to $10 million in debt financing, which provided Believe with a lot of money for researching, expanding and whatnot, and they are obligated to pay it back, of course, as you can see right here, but in product equivalent, which of course is amazing. I was very happy to find this article back when I did. Of course, none of us here at Baby was invested in the company back then. We are, however, invested in the company right now. But anyways, besides the financials, we've also got a lot of other expanding opportunities I believe is not going to leave lying on the table. So as you can see back here on the article at marijuanastocks.com, they did a few mergers back in the days, not so long ago actually, with, first of all, Medigreen. You can read all about it right here if you want, just pause the video. Next one, actually, a very important one, ProCanMed, which was a majority acquisition, also super important to notice. And if you didn't know nothing about ProCanMed, it is basically a Colombian-based company. As you can see here, they fully licensed for the cultivation, production, extraction, and distribution of both sort cannabidiol and medical cannabis, of course, which also provides Believe with a lot of opportunities abroad. It's not only in Canada, not yet in the US, of course, but at least not only in Canada. Even being so young, the company is already making its way into other bigger countries for the cannabis biz, just like it is Colombia. And the last acquisition, but not least, of course, the very own acquisition of Seven Oaks Inc. You could read a little bit about it, about the company, in the link that you will find down in the description below of this video. Or if you don't find it and you still want to read about the company, just drop us a comment and we'll post a link for you. But yeah, in general, these acquisitions really do remind me of some other big names in the cannabis industry. But the only difference is that those companies now trade at prices like $10, $15, or even $35 per share today. And right now, about this stock, you can swipe it up for something around $1. It was around, I believe, under $1 a few days ago, and it is now already above $1. And if you're thinking that we over here at Baby are the only ones to believe in Believe, look at this short article here. 10 cannabis stocks are being added to Canada's largest spot ETF. And scrolling down a little bit, the second stock we see on that list is, surprise, surprise, Believe Inc. Right before names like Haiku Brands, National Access Cannabis Corporation, and many other known and some of the unknown names of the industry.
So as you just saw, this was definitely not a full stock analysis, as we on purpose left out a lot of things. We did, however, make a longer video on this stock on our channel, so if you'd like to find out a little bit more about it, just head over and enjoy the video, or don't. But both ways, we had a lot of fun working with Nick and Tristan. They're both super fine gentlemen, and we would love to see more of them in the future. So guys, whenever you're ready to come and talk on the Baby channel, definitely just say the word and we'll make it happen. Alright? Then I guess I'll see you in the next one.
Fantastic analysis, guys. Couldn't have done it better myself. But for my stock, getting a little bit more serious here, I talked about this previously actually, and I'm going to be talking about it again today. Definitely a lesser known stock. in the solar sector and has been getting hit for a couple of reasons, and we're going to be going into that with Solar Edge, ticker symbol SEDG, SEDG. And right now you can see their year-to-date chart. They started down low, couple earnings brought them higher, and then they dropped back down, and right now you can see they are in the lower levels. Right now it is, what today is? Today is August 20th. And it is around $47. And you could see that it shot up a decent amount just because China tensions are kind of easing. But like we're going to go into, China, like tariffs and trade war is hugely connected to Solar Edge. Now, to get you caught up with Solar Edge real quick, they are an international company. They are based in Israel, and they are involved with multiple countries all around the world, including America and China, of, you know, the biggest countries out there, which is why they are linked with these tariffs, these tariff talks, because if there's going to be more problems with trading with China, that could affect their revenues. But there are other things, so we have to definitely go into that. But yeah, they do have their solar panels. The most unique and interesting aspect of the company is their solar adapters, like inverters. What Solar Edge's inverters do is they take direct current, so from their solar panels, they use that energy and turn it into alternating current, AC, so it could be actually used in your house. They're beginning to like charge your cars with it and that type of stuff. So you could actually use it instead of just powering your house with it. You could power other things as well. So diving back into the numbers, you can see their market cap is just over $2 billion. So it is a smaller company, and their PE ratio is around 20.5. They do not have any dividends. And like I always say, I don't particularly like to look at analyst target estimates, but to just see what they're looking at, they're looking toward a $60 range. Making this a little bit more interesting, we can see their forward PE is 13, which is even lower and more attractive, and their 52-week change, they are up over 76% in 1 year. So that is a beautiful return before this kind of correction they have going on with these lower levels after their earnings, which we're going into, and these tariffs. It was actually over a 100% return when they were in the $60 level. So going into some balance sheet action, we have their total revenues going back to 2015, and you could see growing from 300, 400, and now they're in the 600s. Gross profit is increasing as well, which is even better, and what really interests me is their net income is increasing as well, especially from their last year. Now, I like how they are making money, because a lot of solar companies are either losing money, they're barely like breaking even. This solar company is actually making money, which is very attractive. And you could see some of the charts on the right, their EPS growth, and some more of their financials. Now, Nick, what about their balance sheet? Well, beautiful if I do say so myself. Looking at their balance sheet, you can see this is their assets. They have that's like over $150 million. Their total current assets and their total assets down below. Now, if you compare that to their liabilities, they do not have any short-term debt or long-term debt, and they have significantly less liabilities comparing to their assets. So their balance sheet is looking quite beautiful. So we're going to be going into their earnings, their last previous earnings, but I want to first show you where they are price-wise. So first we could see this is their 3-year chart. You can see they were kind of low for a while, and they were recently skyrocketing. 3-year change is 85%. But in 2017 alone, they grew over 200%, which is ridiculous. And even more interesting, very recently, moving on to their 3 months, they are down over 30%. And year to date, you could see they had a few pops. Those were mostly due to earnings, but they are still lower at the current price. So one, like we said before, main reason for right now at least is definitely with the tariffs. And I noticed this because when there were talks of the US and EU joining together to kind of attack China in that trade war situation, those talks, you know, that sounded amazing because two of them were going to attack China. And that made SolarEdge jump, it was like 8 or 9% in one day. So it's definitely linked with these tariffs. Why it's also down is their earnings, which we're going to look at right now. They missed their EPS by 2 cents. However, you can still see their revenue, $227 million, is up year over year over almost 67%. And it beat by $5 million. So I think a lot of growth investors were definitely, they wanted EPS to grow and it didn't. It missed it slightly. However, that revenue growth is ridiculous. But I also want to show you past earnings. Now you can see this is kind of the list back a few or several quarters, and they beat most of them. Their last miss was in February 2017. They missed it by 1 cent, and then it wasn't like a long drawn out process. Next quarter they beat those estimates. So I think it might be a similar situation. So why do I like SolarEdge for right now? Well, for one, it is an amazing company. They are growing ridiculously. They do have a unique product away from just normal solar panels, kind of like other ones. They are definitely unique in that way with their inverters and how people could actually use that. And also they are international. So even if the tariffs do cause a problem and it could definitely hit their revenues, they still have a bunch of other countries to deal with. So those were the main factors of, one, their earnings hit, which wasn't really terrible, and definitely this industry is kind of all over the place. It's not going to have a steady increase. It's going to have some rocky mountains, but it's still a mountain going up. So that's kind of what I see. However, with these trade wars and tariffs, there is kind of a huge risk in the short term. These could go on for no one really knows. Anything could really happen. If Trump tweets something, it could hit the stock pretty bad, or it could help the stock pretty good. So it's really volatile and risky in the short term. It could even be risky in the medium term just because those tariffs could affect their revenues. However, since their revenues are so incredible, plus 60%, it looks attractive. Their profit margins, how much money they make each, product and service and all that stuff, is still strong. So the business itself isn't like a garbage business. It's still doing very well. Just to let you guys know what else is going on, they're actually in a lawsuit against China, or like a Chinese company, of actually stealing their idea with, from their products. So they're going through that process. Really, no one really knows how long that's going to take. So they're trying to get through that. Could take longer than expected. Could be like a year, maybe more. But just realize, that might not turn out well either, because with these Chinese companies, it's difficult to win. If you're going to attack a Chinese company who's based out of China, China's going to side with the Chinese company. So that's just another risk. So, however, for the long term, there might be a little rocky road in the short term. If that happens, I would possibly suggest building a position. This is kind of a lower level. So this is a pretty good entry point. I actually just recently bought a little bit more shares. If it goes down even more due to these tariffs, that could be another buying opportunity, and then over the long term, it could swing back up and make good returns. So I wanted to give you some pros and cons. It's not all upside. It's gonna be up and down. If you don't like roller coasters, stay away from this one, because you know, these opportunities could go quick. It was like hovering in the 50 range, and then after earnings it shot to the 60s very quickly. So it could drop just as quickly. So just know what you're investing in. This is a more risky play, but you can have a greater return, especially for the long term. So for me, I'm not funneling a huge amount, but I am willing to play with this one. It seems very interesting. I'm just saying, if this trade war blows over, it's going back up to those high levels quickly, which could make it an over 40% return. So let me know what you think with this one, guys, and of course the other stocks that everyone else talked about today in this video. I want to thank Tristan and Antonio for their analysis, their stocks, and their work with this. I think this was awesome, and I hope that we could do something in the future like this, possibly with other people. I like working together. So thank you so much for watching, guys. Don't forget to subscribe here, to them, and all that stuff. I'll leave links in the description for them, don't worry. And I'll see you in the next one.